Chris from FXStrategy.com, taking a look at the upcoming September 27th Forex session. In front of you is the Euro US dollar. As you can see, it fell during much of the session, but got a bit of a bounce towards the end of the day in order to form a hammer. This hammerish candle is based around the 128.50 level, and as such, it looks like we are trying to bounce from here. However, even if we do break the top of this, which would be the classic buy signal, we see a ton of noise above based on previous markets from the original fall, that there's a ton of resistance all the way to the 1.33 level. With this in mind, it should be bullish, but it looks like we could have a little bit of a drawn out battle on the way up. So only those of you that are patient should consider going long. If we manage to break the bottom of this hammer, which of course would be a negative signal, we still see quite a bit of support just 100 pips below at 127.50. So at this point in time, we are not interested in shorting this. And as long as the Federal Reserve's out there printing dollars, we think over the longer term this pair could be bullish. Looking at the pound, we see almost the same action. It's not quite a hammer. It's not as good looking. But this is a healthier market by far. 160 looks to be very supportive on the longer term charts. And as such, we think that even if this pair falls, it's a buy. We would love to buy supportive action at 160. Based upon previous analysis of an ascending triangle, we suggested that 163 would be hit, and it was at the very peak. However, we think that at this point in time, as long as the Fed is easing and the Bank of England is not, we will eventually see a bounce much higher. So we are either going to buy a pullback to the 160 level, or we're going to buy a breakout above the 163. As for shorting, we just don't have that as a thought right now. For FXStrategy.com, this has been a look ahead at the September 27th Forex session in the Euro dollar and pound dollar pairs.